Other news. Last night, Tesla came out with earnings and their numbers, and today everyone is dissecting the numbers. And there are positives and negatives with respect to the Tesla story and the Tesla stock and the Tesla future and the interpretation of Tesla's situation, and on we go. The stock right now is $716 a share, down $22 from last night's close of $738. The volume so far this morning is a light 693,000 shares, which is telling me that there's selling coming in, but I don't know how much conviction there is on this sell side. If this stock had 3 million or 4 million shares of pre-market action on the downside, I would be telling you the street really doesn't like what's going on. But with only 698,000 shares traded, I don't know if this is enough of a negative statement on the stock. Yes, it's down, no question about it. It's down 3% in value. The company issued a report that showed higher profits and higher sales, but the due diligence people are saying, yeah, but they're making their money from selling credits, these pollution credits, because these guys produce an electric car. They have a vehicle on the road that is a non-emitter of pollutants, and they can sell these credits for cash, and that's how they're actually breaking even or making money. Others are saying, yeah, but there's every time they make a car, the car is getting less to make. It's getting less expensive to make each car they make. One, their factory is being paid out as the years go by, as each car goes through the line. That equipment is cheaper per car because 1,000 more cars, 10,000 more cars, 10,000 more cars. You are getting your money back from all that machinery you had to put in there 2 years ago, 5 years ago, and so on. The battery costs are dropping because Tesla is a world leader in battery production and in battery research, and they are spending a lot of money in battery research to bring out stronger, more efficient, more effective battery packs, less weight, less cost per, bringing the cost of a car or a truck or whatever we're going to do down to net out a higher net margin. Of course, the opposite, the negative people are going, yeah, but the Volkswagens are coming out, the GMs are coming out, the Fords are coming out, all these players are coming out with electric, and Tesla won't be all by themselves anymore. Yeah, okay. And then the other side of the argument, they go, yeah, but where are you going to charge your Mercedes or your Ford up with? Can you find 10,000 chargers around the world or 20,000 chargers like you can with Tesla? No, you can't. How's that going to work? And there's certainly not going to be a so-called free charging network anywhere for these brands. You're going to have to pay. And yeah, there are pay-for type units out there, but you're not going to get charged up in 15 minutes. You're talking 30 minutes, 45 minutes. You are restricted to city driving, likely, and you're restricted to commute kind of driving where you plug the car in at home and overnight you charge it up again and then off you go. There's nothing wrong with that. But there are those out there who have range anxiety, and depending on the demographic you're after for the buyer, certain demographic buyers, they want range. They like to get up and take off for the weekend. They want to, LA to Vegas. Let's have fun. They don't want to have to stop every 150 miles for a half an hour. They want to drive right to Vegas and then plug the car in at a parkade when they get there. And then when they leave, they're charged up to come home and they're all good to go. Certain cars can do that. Certain brands cannot. So that might be a deterring factor. So both sides of the argument are raging away here on Tesla. There's worry about Tesla. Are they yet making any money on their solar division? Are they making any money on their power walls? What are all these? What's it all about? Where the optimists are going, you got to remember, folks, that 5 years ago, this company was barely producing 50,000 cars. Now they're doing 500,000 on our way to 1 million cars a year and then beyond because they're building factories all over the place. Cut them a break. Let these guys grow to fulfill their potential, because that happened at Amazon for 20 years. Amazon grew and grew and grew, and no one saw money, no one saw profits, no one has seen a dividend from Amazon. And yet here we are. It's one of the most valuable companies in the world, and Amazon is no longer considered a high-risk, fly-by-night retail e-commerce type company anymore. Tesla's just going, hey, GM's been around, Ford's been around 100 plus years or more. You've had all the decades to invest in those companies and all the trials and tribulations. We started with nothing 15 years ago. Here we are now at this level. Here's where we're expecting to be in the next 5 to 10 years. You want to enjoy the ride? Do you believe in the future? Do you believe in the fact that Mr. Musk, who is still relatively a young man, has many decades left to give? You want in on this deal? You're talking about a Steve Jobs. You're talking about an inventor, a creator, a Henry Ford, a marketer like Lee Iacocca. You're talking about a guy who's trying to execute here. Are you in it for the long haul, or aren't you? And so Tesla right now is really gyrating along here. And today, I don't know. It wouldn't surprise me if the shares trade down to 700 sometime today. But then again, they could go back up to 750 by tomorrow. So I would not be too negative on this stock for too long. Something tells me there's quite a bit of upside here. All right. A few other things. Let's take a look here. As far as our SPACs go, Starboard Value, we're down 2 cents on the pre-market to $9.95. Nothing worried about there. IPOE, the company is going to be known as SoFi. They're up again, 17.09 in the pre-market. Nice to see. They actually were at 17.50 this morning for a brief moment in time. They were 40 cents higher than they are now. They're still up 40 cents on the morning with 75,000 traded. And I just get the impression that, one, the shares dropped too far too fast last week or two. And number two, we are definitely getting closer to the deal. And more articles are coming out about Social Capital, Hedos Sophia Holdings Corp, or IPOE. More articles are coming out about the company as a long-term, viable, positive investment. And I am saying to all of you, as I've always said to you folks, I think these SPACs, this is when you get in them. You get in them when no one wants them, when they're still quiet, they're still early in the game, well before they merge in, and you pay the price of time to hang on to these shares. And when they do their mergers, I think you will be well rewarded for your investment of time and money. Gores Holdings, GVHI, or GHVI, excuse me. It's up 9 cents in the pre-market, 13.59, no volume here, 6,000 shares. They were in this 13.60-70 range earlier this morning. Gores Holdings, Matterport is the company they're merging with, and there are more and more articles coming out on Matterport. It seems like weekly, I'm beginning to see more and more positive coverage of Matterport. And something tells me that this company, these shares, are going to do extremely well once the merger is completed. Over at Fifth Wall Acquisition Corp, is the company that's going to take on, merge with SmartRent. The shares are down 27 cents in the pre-market to 10.36. I'm not surprised. I think these shares are going to be in the 10.50 range for the most part for the next month or two, giving you time to pick these off and pick them up because the SmartRent merger, I think, is going to be a beautiful deal, but it'll take until the third quarter, they say. So we're looking at a full 90 days from now at least for this deal to go through and be completed. But I tell you, we are in the second quarter. This will be done in the third quarter. It could be done by August, September. And so you have some time here, but not forever. Get yourself some of these shares when you can. And again, tuck them away and get ready for the ride. Let's take a look here at VGAC, Virgin Group Acquisition Corp. Nothing going on here. It's down 4 cents to 9.97. There's talk about, someone mentioned to me something about along the lines that Citadel owns 5% of this company. It could well be that they've always owned 5% of this company. I'm not really sure. I like this deal. 23andMe is what this company is going to be called. And when that deal is completed, should be in the next 30 days, I think you're going to be very happy and surprised at how much news will be coming out of this company for the world to hear about. I think we're going to be quite active on that. Other stocks that I'm watching, MicroVision, I'm just keeping an eye on it. It's up 90 cents on the pre-market right now. It's up 87 cents, 27.31. It's traded 10 million shares in the pre-market this morning. MicroVision, MVIS, low trade in 52 weeks, 24 cents. High trade right where we are right now. They touched 29.30 this morning in the pre-market. There's a ton of speculation here. The worry I have about this stock, unfortunately, For those of you who are playing this, I think you're playing with a stick of dynamite that is lit. You just don't know it's lit because the fuse is inside. And when it goes off, you're going to lose your hand here. What I worry about is the moment that this play runs out of gas and we give up 20 to 50% in value of this deal. I do not see this as a takeover target. I do not see this company going to $100 a share. I do not see the short squeeze running this stock where some people want it to go. So be very mindful of this stock. Here today, gone later today is my initial gut feeling. I will not dispute, though, the number of shares traded are substantial. But I'll tell you right now, it's all on hype. It is not on financials. This company does not have any financials to speak of, to get excited about. They don't even have 20 million in sales on an annual basis. So be careful here. This is really an overpriced issue by a ton, and it may have already had its best moments. But look, I will tell you, I admit, stocks can take a shot, and they do. And this one is one of them. But the question right now is, has it already done it? There are people in here at $1, $2, $5, $6, $10 who are cashing out while you're coming in. And I don't want you to be the last one into this party. And I worry that maybe this is it, because even with yesterday's incredible day of 213 million shares traded, the aftermarket had everything going for it. And right now the shares are up only 67 cents in the pre-market right now. That's telling me that already in the pre-market, we are running out of steam here. And we may not have enough movement in the first hour or two to continue it. So watch out. Just be really careful, please. Chewy, the company that Ryan Cohen founded before he took over GameStop, 83.50 up 88 cents a share, has been in this range a couple of times this morning. We're talking about a company here worth $35 billion and climbing in market cap value. Do not be surprised if the shares of Chewy will break 100 again in the not too distant future, which will tell us that the market cap of the company will likely rise to in excess of $40 billion, maybe $42 billion. And I keep bringing this example back, and I will not stop. GameStop is going to be valued at a higher value than Chewy when it's all said and done, because GameStop will be a larger e-commerce company than Chewy is an e-commerce company. They'll both be profitable, but I think the GameStop profits can be much higher only because they're global rather than US based only for their business. If, however, right now GameStop were to be trading at approximately the same market cap that Chewy is trading at, your stock on GameStop would be trading right now at $450 a share. And at the moment, at 185, this stock is way behind GameStop on an equal footing basis. So I mentioned that to you. I will keep mentioning it. And I have a suspicion that it's possible that in certain areas of the hedge fund world globally, some players are beginning to hear this news and are beginning to figure this out, and they're checking it out themselves, and they're doing the math, and they're figuring out, man, GameStop did 2 billion plus sales in the fourth quarter. They're going to do 2 billion in the first quarter already. They're back to 8+ billion in sales. Last year's actual sales were 5 point something billion because of the COVID. They're back up over 8. They could well get into the 10 billion in sales range next year, 2022. That is more than what Chewy is doing in gross sales. And if they are reducing that retail footprint and raising their margins, this stock, even if it just equaled Chewy, just equaled it, it's 450. Why am I shorting at 150 a share, 140 a share? It's now 186. Maybe I should cover my butt and cover myself, because I could get burned here. And that's kind of what I'm wondering. And maybe that is beginning to happen here. Apart from all the other stuff going on, remember, this Friday, options expire like they do every Friday. And at $186 a share at this moment, this stock, every contract that is 185 and lower is in the money. Last week, it was 150 or lower in the money. Now it's 185 or lower. Well, these shares want to go to 220, 250 this week, and anything's possible. But a $220 stock this week would put all options at 220 or less, all in the money. That would be 15, 20 million more shares in the money on the naked short selling market over in Chicago this Friday. I'm just saying, the ingredients are all there. I just don't know what the follow through is going to be. I have no idea if there's a hedge fund waiting in the wings to slam this stock the minute we open for trading in 12 minutes. I do not know. I'll be here to find out with you. There was no selling yesterday into the market. There was no selling in the aftermarket until the stock reached $199 a share. Then we finally ran into some selling, opportunistic selling, of course. Here we are at 186 right now. What do we do in the first hour of the day today? And how much volume will come into this stock from the outside? And is it forced buying? And as I said earlier, how many brokerage firms are going to say enough's enough? We're not carrying short positions anymore through these failure to deliver games. We want declared shorts or none at all. And the declared short position on GameStop apparently is 11 million shares. But I think you know what I know. You add up all the shares held by the institutions around the world of GameStop, and there's 100 and something million shares held by institutional holders. Then there's the retail investors. Remember, you folks out there who are considered morons by CNBC, there's 100 million held by you guys, as my best guess. It is a huge number. You guys have a ton of this stuff. I think you own more shares than exist as far as the original 70 odd million that were out there. I just get that in vibe. It would not surprise me that the viewers of this channel who follow me regularly, all of you combined have more than 5 million shares of GameStop. Right there is 10% of the so-called free float that used to be in existence. I strongly suspect that the free float is less than 12 million shares, and half of it, almost half of it, is here watching me live every day. The power you guys have, you have no idea. I don't know if you have an idea. I know some of you have an idea, but some of you don't have an idea how powerful you folks really are. If you do not sell your stock and do not make it available, this goes up. And not a lot of buying coming into this market, and there is buying coming into this market, but not a lot of buying already will move it. Without resistance on the upside, this thing can really go nuts. And so we're poised for a possible run. I don't know if it'll happen here, but it sure looks like there's all the ingredients are in place for this stock to take another shot. And we'll cover it for you. We'll do the best we can. 10 minutes to go until the opening. Thank you, everybody. Lloyd, thank you for your donation. I saw it. I've lost it. Appreciate the $5 donation. I know you're talking about something about 950 million that's in the company. Thank you for your donation. I'm going to double check something here right now. Here we go. I want to read your comment because you've waited a long time for me to get to it. Let's see if I can find it here. Is it here anywhere? Lloyd, yeah, 950 million is what we know. We don't have their sales from this quarter entering June 23rd. Will be very interesting. Lloyd, you're absolutely right. L4G Custom Fabrication said, wait, Bruce has a wrinkled brain. All of us shareholders have smooth brains. What's that all about? And thank you all for those of you for these comments. I appreciate that already today. And welcome aboard new members. Welcome aboard members who are rejoining this channel. Thank you all for your loyalty to this channel and also following me and keeping up with me. I appreciate it. It looks like Eunice has rejoined the channel. Thank you very much for doing that. Andy Buscemi, thank you also for joining the channel. Appreciate that as well. I've been just ranting and raving here in the first hour, as I am apt to do. Thank you, everybody, for watching the show and being here today. Appreciate that. GameStop 184.05 right now, up 15.12 on the pre-market from yesterday's close officially. Home prices in top 20 U.S. cities up nearly 12% in the last year from Case-Shiller studies. Very powerful move in home prices. We know why, and I don't think this is going to stop. We'll see what's going on. Thank you. The big market right now, the actual street, the Dow is showing at the moment with 8 minutes to go before we start trading an 9-point possible loss or down dip of 9 points. That's unchanged. S&P up 3 points and NASDAQ up 19. So the markets are flat at the opening. No selling pressure coming in. Today, we will hear new earnings per share earnings from corporations coming out tonight and tomorrow and the day after. The next 3 days will be a huge amount of earnings coming out from a number of companies. We'll be watching that very closely to see how everything works out. Oil is up 69 cents a barrel to 62.60. Happy to see that, I guess, if you're in the oil business. And we'll see just how this market wants to get going here to start the day off. Wow, we'll see what's going on here, what's happening. I heard this morning that Nomura Bank from Tokyo, Japan, announced a huge loss because of the Archegos mutual fund problem. They have taken a huge hit, and that's not good. I'm waiting for UPS, the folks over at Credit Suisse. I'm waiting for Credit Suisse, excuse me, from to tell us just the details of their situation. Apparently, regulators in Switzerland are really digging through Swiss banks' books and lending practices and due diligence reports and all this stuff as to how did they get themselves into such hot water with that Archegos, and are there any other Archegos-like situations at United Swiss Bank? We'll find out about that. That's not good. That's not good at all. Thank you, everybody, for all your comments today. I appreciate it. All right. Well, there you have it. Any thoughts, questions? Let me know. We'll try to read as many comments as I can from you. If any stocks you want me to look at, let me know. We'll see what we can do with that. Thank you, everybody, for being here. And if I can make this show any better for you, let me know how I can make it better. Frankie, thank you for your donation today. Appreciate it. Ashley, you got it. 7 minutes to take off. Now 4. GameStop won't stop at all. Let's see. And here we go. Pyromania. Sarah, our best case scenario would be Citadel holding a large short position, running out of liquidity, and declaring bankruptcy. How about that? That's right. Andy, whether up or down, don't let the market control your emotions. You control your emotions. Stay focused on facts, not little moves here or there. Wait for the rocket. Patience equals profits. There you have it. Interesting stuff. Let's see what else is going on with some more comments here as we come through here. Frankie, everybody chant transfer of wealth, transfer of wealth, transfer of wealth. Hi, Uncle Bruce, can't stop, won't stop, GameStop. Frankie, thank you very much for this donation. Appreciate it. Archeo, Bruce, do you see a massive margin call coming with the Archegos debacle? You see, what I wonder about this debacle is whether or not investment banks out there who are acting on behalf of mutual funds and hedge funds and pension funds, if they have aggressive clients that are hedge funds, I'm wondering about how many investment banks are going to tell their brokerage divisions to calm down and back off of the leverage and pull in the exposure of the firm to a bunch of these entities. Even if it's a 10% reduction in liquidity and whatnot, this could have a huge effect on over leveraged positions, and that's where GameStop comes in. We may have a situation here where GameStop will be brought back from an over leveraged scenario. A Hungry Grizzly, time for a Euro stock. What's your thoughts on Rolls-Royce? Well, Rolls-Royce, having had issues over the years, jet production and everything else, we don't think of it as a car company anymore. It really isn't, the car company anymore. It is about high tech and everything else. I don't know. I mean, the low 34.59 for the last year, the high 146, sitting at 105 right now in P, 105p. I don't know what to make of it for sure. Let's see, 8.7 billion shares outstanding. That's a lot of stock. Public float, 8.2 billion. So that's all out there. We don't know the short position or anything like that. I just can't say. They don't show a PE multiple, so they're not making money. You got to wonder about Rolls-Royce, down the road here. It's hard to say. Sales since 2016 to 2020, 15 billion in sales in 2016, 14.7 in 17, 15.7 in 18, 16.5 in 19, 11.7 billion in 2020. Definite drop, not good. Net profit, net income is non-existent. I mean, it's losses. 4 billion losses in 16. And now 3.1 billion in 2020, 1.3 billion the year before. So it's red. They've got a long way to dig out of it. And I don't know what the prospects are for that, unfortunately. So can't give you happy news on Rolls-Royce, I'm sorry to say. We've got Lloyd, e-commerce companies traded around 20 to 80 times earnings. When the market realizes this is an e-commerce company, will they price in the multiple? That is what I'm waiting for as well for GameStop. If they are going to make 350 million in profit, let's say $5 a share approximately, and they're going to trade at 80 times that's $400 stock. If the street thinks that they're going to make, say, $1 a share this year or $2 a share this year, $5 the year after that, and $10 the year after that, you get that kind of growth potential of the company. And that can be from organic growth, or it could be from acquisitions. We don't know yet what the plan is with Mr. Cohen, other than converting this company into an e-commerce powerhouse. It could well be that he acquires other corporations out there, be they private or be they public, and be they American-based or be they overseas-based. What if GameStop goes on an acquisition spree? They have some cash in the bank, 900 million, all right, but I know that they can raise a couple billion at a drop of a hat if they needed to. And or the fact that they can issue stock from the treasury to acquire, say, a private company and absorb it in. Use your stock as collateral with a little bit of cash, take on private companies that are cash flowing now and making money, add that to your bottom line. The next thing you know, you've diluted your company with some stock issuance, but you've just increased the cash coming in through the front door dramatically. This could be a growth curve that people have not expected or were not envisioning. And you're not going to hear about it on CNBC, obviously. So there could be some real multiple expansion here of earnings, which would keep this stock at a very high multiple per share. After all, Amazon is still $70 times earnings. Amazon, the $1.6 trillion monster, is 70 times earnings. For this company, GameStop, they could easily be 150 times earnings. They're 1/1,000th the size of these guys. And if their earnings can double or triple each year going forward, they will trade at a much higher multiple than 50 or 70 or 80 times. And so think about that. If they're going to generate $5 a share in earnings and then $10 a share earnings, and they're going to trade at 200 times multiple, you're talking about a whole lot of money here. Yeah, so this could be most interesting. We'll watch for that. We are open. We're up and running. Let's get the market rolling here and see what we have. Here we go, and we will pop up my computer and my phone and see what everything is doing. All right, GameStop is open right now in the first minute of trading, showing $180.56 a share, up 11.63 on the New York Exchange. 703,000 is the first opening trade. This is definitely 4 times higher than lately. We've only had 160,000 trade in the first minute lately. Let's keep an eye on that as everything settles in here. We'll find out what kind of interest level we have. Also, will there be an attack on the stock right off the bat by hedge fund positioners who are really in trouble? If there are any out there that are short, they are in big trouble at this 180 level. They're going to try to knock this thing down as hard and as fast as they can to dissuade people from trying to get in here, or make them think maybe you don't want to get in here right now. This is the psychological game we're talking about. Let's see what's going on. Thank you, everybody, for popping in this morning. Let's see what this market wants to give us.